which is why I'm saying right now I don't have any Bitcoin. If you were to hold Bitcoin, which I don't, you should self-custody it and don't let anyone know about it. Yeah.
Don't go on a podcast and shield Bitcoin for a year. I don't have any too. I should buy some someday. I will.
Welcome back to Token Narratives. I'm Graham Stone, resident midwit, joined as usual by resident gigabrain loudmouth, David Sensel, and
what's up,
chief scientist Andrei Terentiev is also here. Welcome back, sir. All right, so let's start off with a gut check. Bitcoin trading at $117,500. Interestingly, the Bitcoin dominance chart has bounced. So it looks like it bottomed out at around 60, just above 60%, bounced up to 62.5, it's almost 63%. So that begs the question, is alt season dead? What do you guys think?
The 1 week alt season.
Well, I mean, the dominance has fallen for about 4 weeks now. So
yeah,
you could argue that we had like thus far a 1 month alt season, hardly an alt season by my estimation if it's just 4 weeks. But I think I said
barely made it to beyond the majors. Barely made it beyond the majors.
Yeah,
exactly.
I think I said in the weekly that we were at a turning point earlier in the week, and lo and behold, here we are. If it continues down from here, if Bitcoin dominance rebounds higher from here, I think we can kind of call this alt season finished. But if it turns back around, I think you'll see all the crypto native people get back into all their favorite non-Bitcoin coins.
I think it's.
Go ahead.
I think like one thing that's I guess like interesting, and I don't know how it's playing out, is like the altcoin treasury companies, because I know Tom Lee is the one that's really pushing the ETH treasury company narrative. I wonder if that will create some new class of alt season, particularly for the majors. I've heard this now being talked about for Solana. I think Arthur Hayes is backing something that's doing it for Athena. So, like, is this the new strategy for the altcoins to try and get on the Bitcoin treasury company hype? And like, does that create a new mini alt season for these types of coins? I could see. I'll be bullish on ETH for once, and thinking that could be like a good secondary treasury company play that we might see play out. In general, like, I don't feel very good about the market as I have the past couple of times I've come on here. There's a little bit too much joy going on in the timeline, which is really scaring me right now. That's what I'll say.
Sounds like PTSD, brother.
Yeah.
No, but I feel that as well. I think so. Yeah, the treasury space is one place to look at. The inflows of the spot ETH ETFs is another place to look at, and they continue to be positive. I'm looking at it for today. So the positive streak for ETH continues. I think that's a pretty good sign. And I think I said before, if I think this might be the biggest indicator, if there's a material change in institutions moving into spot ETH ETFs, they're not going to be as finicky as paper-handed retail and crypto natives are. So this would just be kind of I think, a steady allocation into ETH, and it looks like they would be doing it with preference over Bitcoin, or at least some percentage of it that would go to Bitcoin is now going to ETH, and that to me would be pretty bullish if this does continue like that.
Yeah, I mean, we've got the charts up here. So ETH inflows into the ETF are out. I mean, they've been more positive, relatively speaking, than Bitcoin. Especially the Bitcoin had 3 negative days, net negative days here. Looks like the last day did print a positive, but it's about 180 million was the last day, and Ethereum 230 million. So smaller asset garnering more of the ETF flows, thus ETH showing strength relative to Bitcoin.
Yeah. Also, one other thing that has nothing to do really with the asset itself is the Trumps. Have you seen Eric Trump posting on the timeline all this week, talking about how awesome he is for buying ETH and for saying now is a good time to buy ETH? There were a couple good dunks on him, like Bold Leonidas showing, he said in, I think, March, good time to buy ETH, and then it went down for 2 or 3 months, and then he retweeted his tweet saying, "I told you so." I think like this past week. So, but in all seriousness, the fact that he cares about this, that a Trump cares about this, I think you wouldn't want to bet against someone with political power who is in World Liberty Financial. I think they bought ETH this week even. So I wouldn't want to short ETH, I guess, because having someone with political power backing ETH, it's not smart.
It's also one of the only assets that is like close to being like an institutional adopted asset. Like I don't see really the case. Well, there's like Bitcoin, stable coins, and then I would say ETH is like up there. Like I just don't really see it for anything else outside of that right now. Like maybe you could make like a case for Solana, but that really seems like a stretch for me. And then like outside of that, I see nothing. I don't know. Correct me if I'm wrong. That you think that there's more stuff out there that's like institution grade crypto, but in that way, it kind of makes me feel like ETH is the one.
Yeah. So for whatever reason, Ethereum has picked up the institutional bid for institutions that are looking to allocate to crypto. They put a certain percent in Bitcoin, and maybe that's just like a different bucket now, Bitcoin. And so if you want to like get exposure to crypto, and you don't want to think too much about it, you just buy some ETH. All right, it seems like that's the narrative. I mean, yeah, it seems like a matter of time though before the next one gets picked up in the narrative, like Solana or something else. But yeah,
are institutions gonna? I mean, I don't think institutions are gonna change narratives as fast as we will. And so, if they are the marginal buyer of ETH right now, then I'd imagine that they don't really. I mean, think of it like this: everyone expected ETH to pump bigly after it got spot approval the last year, and it did nothing, right? And the institutions didn't touch it until the next calendar year, when they could readjust their buckets, probably, Graham, right?
Yeah.
So that gives you a feeling for their kind of time frame, right, when they're going to switch up their allocations. So I also agree that even if Solana gets approval and XRP and all the others, you probably won't see institutions buying it. You might see retail, but you won't see institutions.
Hold up. Again, I forgot about XRP. XRP is probably going to be pumping more than all of these.
Yeah.
Despite me not having any idea why, it'll probably be doing the best.
Yeah, XRP hit $200 billion market cap, which that's about the same as Goldman Sachs, the market cap of Goldman Sachs. So apparently, like Goldman Sachs, like apparently has a business, they do things. It's an investment bank. XRP, on the other hand, I'm not sure what that does. Does
I don't
anyone
know.
know?
I think Goldman and XRP are actually quite similar. They're in the business of
Okay.
getting close to powerful people in politics and winning that way. I mean, obviously, you could look at the 2008 financial crisis and see how many Goldman Sachs or formerly Goldman Sachs CEOs were around that, and lo and behold, they made out really well for that. And
Yeah.
Brad Garlinghouse is also now close to Trump. But I digress. I would say one thing that would make me hopeful for a real altcoin season. I don't think we've really entered into one yet. Would be usually it's not Bitcoin that really kind of causes the altcoin season. It's often Ethereum, because I feel like it's just closer to all the other like shit tier coins, and so I think if Ethereum continues to pump and you see like an all-time high, for example, and it goes up to like 5K or this kind of thing, when Ethereum finally does take a breath, then you could really see just like a lot of profit taking and the crypto natives pouring into other assets down farther out in the risk curve. Then you would see what I think would be considered what reminded me of like the last cycle or the previous or the cycle before that.
Yeah, I think let's bring up the pump situation, because pump dumped. Sorry, I just really wanted to say that it's now below the ICO price, so it's been basically down. There was a little pump off the start, and it dumped down to 0.002 cents. The ICO price was 0.004 cents.
It's still going down, by the way, as we speak.
Still going down. I've been looking at it thinking, surely this thing's going to bounce, but I'm waiting for that bottom, I guess, to form. I don't know. Do you have any thoughts on this one? There's no bottom. Yeah, I mean, we were pretty bearish on pump last time we talked about it, David. It doesn't have a moat. The meme coin meta is kind of on the outs. We just saw it kind of as a cash grab from the company. Andre, do you have any thoughts on this?
Yeah, I mean, I think like I also saw on the timeline, like basically all of their metrics are also down and to the right. Like I don't know, like it's like active addresses, like amount of trading volume, and all of this kind of things. So
yeah,
not only is their coin price going down, it's like their general overall engagement and volumes and all of this have been, and it's not like a one-off thing. This has been going on for like months. I think like the Libra coin was like the peak of their stuff. Now they still make a shit ton of money. Obviously, does that benefit the token holders in any way? I don't know. Maybe, but I think they'll have to pivot right into, and they're like doing this now. They're saying like we're going to be a social fi company, or like, we're going to be a social company. And you're just like, yeah, I don't want to be buying a social
it's been tried
company.
many times. Exactly.
Yeah. They also oh god, I forgot what I was going to say. Never mind.
David's running on fumes here in the midst of a move, hence the background noise. But hang in there, buddy.
I mean, they timed the token.
I had something
perfectly.
very insightful to say. Goddamn it!
I believe you.
How much did they end up raising overall?
Over $1 billion.
1.1 to 1.3 billion. Yeah.
Third biggest ICO ever, behind EOS and Ton.
Yeah, I mean, I just don't see it going anywhere. And this kind of goes like just the other thing I actually was going to talk about a little bit in the beginning was like, I wonder if like this meme coin thing is going to hurt Solana in the long run, because I think like it's built such like a brand association intertwined with like Pump.Fun and meme
Yeah.
coins. And if it's like now this like institutional narrative, um, like how do you pivot from that? It's like, oh yeah, like all of our volume is on these shit coins, but we got great tech. It's like, yeah, but
Yeah.
like I don't know if I want to do that. But ETH is still like got the DeFi narrative, so I don't know. I feel like it's like bad for Solana, bad for Pump.Fun right now in general.
Yeah. The narrative has shifted, and yeah, narratives drive so much of price action in crypto. So it's not looking good for Solana right now, but yeah, I don't know. Things could turn around.
Solana
I mean,
looks.
I say that as a Solana bag holder, and
I
someone
think.
who dropped my ETH mostly. So
I mean, I think Solana still looks pretty good. I think it'll pump really well. Um, I would actually imagine that Solana would probably get a higher multiple than Ethereum, simply because it's starting from a lower base
yeah,
in this
possibly.
cycle. Yeah.
Also, it is notable. Yeah, you got your point. I just want to add one thing. There is a recently launched Solana ETF. It's not like a real. It's like some sort of like offshore shenanigans. And what I saw though is that the flows into that are actually better than the equivalent version of the Ethereum one when that launched. So I mean, that doesn't tell you much because we're in a different market environment now. There's just more money sloshing around. What's your point, David? You remembered it?
Well, I was just going to talk about the tokenomics of Pump, the Pump token, which were
yeah,
just also subpar, right? Like 25%.
Yeah, a bit lukewarm.
Of the revenue. Yeah. 25% of the revenue goes back to the token. But even worse than that is like it's just so suspicious is that the it's not programmatic.
Yeah,
they're not programmatically buying the token back. It's just whenever they want, right, on a whim. Whereas with like, I think with with Hype, for example, it is programmatic. It happens from the smart contract, and it just happens automatically. I think Bonk, like Let's Bonk.Fun also does that as well.
Yeah.
So again, just I don't know. These Pump.Fun guys seem.
It's the tokenomics for Pump are kind of a trust me, bro situation. So yeah, not so bullish on that. But I will be watching that chart because with so many people pumping, like shilling it, like I heard endless influencers talking about how great it's going to be. It does seem like it's gonna pop. It's gonna at least bounce at some point, but it's not a long term. It would be a very short term trade if I got into that. I think.
I also agree. I think it is going to go up. For me, I am going to try to trade it. I am absolutely going to try to trade it. I'm not going to put a lot of size into it at all, but it's too good of an opportunity. I do think that all the people that we saw on the timeline shilling the ICO and kind of patting themselves on the back, like all the haters, all the doubters, the ICO was amazing, 12 minutes, this is great, you love Solana. I thought I was like taking crazy pills because I had come out publicly saying this looks suspicious. I wrote about it in my newsletter, like I'm not touching this looks crazy. And then so many of the podcasts I listened to, all the people were foaming at the mouth about it, and then congratulating themselves for like the successful ICO. Silent for the the past week or whatever.
The thing about the Solana community is a very mouth foaming community. I don't know. I don't know what it is. Sorry to interrupt.
No, I mean, I feel the same way about the ETH community. To be honest, like
yeah, I agree.
Everybody.
The ETH people are they've been kind of yeah. I prefer the Solana people barely. over the ETH people, but yeah, it's not a race to to be in for that.
Yeah.
But
Meanwhile,
Graham,
yeah, go ahead.
let me just ask you, where would you get in on pump? At what
I don't know what
market
level,
cap?
but I don't know about the market cap. I would just look at the chart to see when it looks like there's a bottom forming. I'm not going to try to like catch a falling knife on it. If it looks like it sort of flattens out and then starts coming back up slowly, that's when I would get in.
Yeah.
Yeah.
I had an interaction with one of the blockmates fellows, and he pointed me to some wallets of participants in the ICO that they bought 150 mil, and they've been selling it like indiscriminately for the past, I guess, week. And
At a loss, or barely at a
I
break
don't know.
even.
It's some of this stuff seems a little murky. Flood, the hype guy, he was also talking about this. How he imagines some of the people who were in the private round. I think it was still at 0.004. However, they also got equity, right? And so they would be they would be basically longing the equity, holding the equity of the actual freaking company, and then just selling the token indiscriminately, right? Um, and so he was like, yeah, the token is a bad proposition from that respect. Anyway, you can imagine that when these people finish selling, that would hopefully form a bottom. So it's something to look for. You can see on chain.
Yeah. All right, let's pivot from alt season and shitcoins, and let's talk about Bitcoin again. I want to try to present to you guys the big long thesis. All right, and I'd love to get your opinions on this. Bear with me. It involves talk of derivatives and things I don't really understand, but I'll try my best to. Okay, so
big long?
Yes, the big long thesis, coined, I think, by the person who created the thesis himself, which is this guy, Darkside 2030. You can find, that's his X handle, and it was explained in the most recent episode of the TFTC podcast. I don't know if you guys listened to that one at all. I like it. It's a Bitcoin focused podcast, and it focuses relentlessly on the bullishness of Bitcoin. So if you're in need of a dose of hopium, check out that podcast. Anyway, this guy. Sorry, just give me a second.
Am I to understand, Graham, that you need reassurance of Bitcoin from now on?
Absolutely, absolutely. What sometimes I wake up in the morning, I'm like, what am I doing? I work at a Bitcoin.com company. I got all my like net worth tied up in this thing. I need reassurance. Feed that dopamine straight into hopium dopamine straight into my veins. I'll take it whenever I can get it. But seriously, this thesis. Well, let me explain it. You guys tell me if you think it's just pure Kool-Aid. So, all right. So this guy, on the guest on the show, he is a retired options trader, and so he started his career in like the late 80s, I think. And the point is being, right, he has an insider's view of how the system, particularly like derivatives and options and whatever puts, how that all works. Now, his theory is basically that like Bitcoin's unique properties, like its fixed supply, the fact that it's a bearer asset, meaning you can take custody of it quickly and instantly, and that, as well as the on-chain transparency, it's like fully auditable. That will actually cause systemic disruption to the traditional financial system during the next global financial crisis. And when that crisis hits, the price of Bitcoin will explode in the mother of all short squeezes. That's the basic theory. I don't know if you have any comments before I dive into more details there.
Yeah, let me just make sure I understand the overall thesis. Is he thinks that in the next financial crisis, Bitcoin will react to the downside, like usual, and then people will short it, and then that will accelerate its move to the upside. Basically, is that it?
Not exactly.
Okay.
It's
He
more
doesn't think
that
it's going to go. He doesn't think it's going to go down in reaction to the financial crisis.
I think it's the opposite, right? So
no.
basically, that everything else will dump, and people will flee to Bitcoin.
Yes, and
But
here's
it's
where
a
it gets murky.
short squeeze, right? A short squeeze.
It's a short squeeze, though, because
people are shorting it.
yes. All right, so this is the part where it gets a bit murky, but like maybe I can explain this a bit later in the explanation, but like even when you're long Bitcoin, the institutions still have to have a short position. For the example that was given in the podcast is, okay, let's say Bitcoin's trading at $1 million and you've got 1,000 Bitcoin or something, you're a big holder, OG holder, right? You want to get some insurance on your Bitcoin. And so you go to like a financial institution, they set up some kind of derivative that's basically an insurance product. So like something like if the price goes to 800,000, I don't know, they have to look, sorry,
Yep.
I don't know how.
I understand. I
exactly
understand how this
these
stuff
things
works.
Yeah.
I understand the mechanics of options, but
yeah.
I was
So
just
neither
trying
party wants to short, but effectively the insurance provider there, the financial institution, is taking a short position in that situation. So that's just like one example of the kind of
depending on how they structure it, right? Like depending on how the bank structures it. But anyway, yeah, I get it.
Okay.
But
All right,
I
let me
yeah. Okay. All right. Never mind.
Let me see if I can.
Let
me see. I'll go through it more, and we can see if this holds any water. And yeah, feel free to criticize. So, all right. So let's talk for a second about the GameStop short squeeze. So that short squeeze was ultimately crushed, but his theory is that you couldn't crush a Bitcoin short squeeze because of the way Bitcoin works. So with the GameStop short squeeze, the price exploded because there were more shares shorted than shares existed. So it was a synthetic short over 100% of the float. And what was the reason they were able to crush it? One of the reasons they were able to crush it is that GameStop went ahead and just issued new shares, around $3 billion worth of shares that diluted the short squeeze, increased the float, and gave shorts away to close out without sending the price even further than it already had
trading.
gone.
They also
Exactly.
halted trading before to allow them to figure out what to do.
Exactly. So that's the second point. But of course, while you can issue more shares like that with GameStop, you can't do that with Bitcoin, of course, right? There's no way to issue new Bitcoin, and there's no like CEO or board to pressure into increasing the float or cooperating with Wall Street in any way. And so then the second point you said, right? They Robinhood turned off the buy button, right? So the GameStop was subject to centralized control and limited availability, right? So it was mainly traded on Robinhood. Exchanges and brokers restricted retail flow, which eased pressure on the short sellers. That can't happen with Bitcoin because it's a global asset. There's just like exchanges all over the world, even peer to peer, right? So it just doesn't have that restrictability. And then the other big part of this is that with GameStop or stocks or basically any traditional financial asset, you can't really ever take custody of it. It's always held by a third party. And that intermediation allows them to sort of like slow things down, right? But with BTC, you can take it into cold storage instantly. And then once that happens, once people start taking it into cold storage, it can't be borrowed anymore by the financial institutions, and they need to borrow it in order to settle their shorts. So, all right, the third part of why GME was able, that short squeeze was able to be crushed, is that there wasn't really any transparency into like what was actually happening. So nobody was sure what the actual float was. And that opacity is what allowed the market makers and brokers and regulators to sort of like behind the scenes figure out a way to stabilize the situation. But if the same thing were to happen in Bitcoin, it's fully auditable all the time. So no one, you wouldn't be able to hide what's happening, and that would lead to a panic. So, all right, that's why GME or GMS was able to be crushed. That short squeeze was able to crush. You wouldn't be able to crush a Bitcoin short squeeze. So the upside could be exponential. Now, the next component of this is that there's just a growing amount of paper Bitcoin in the system. You've got increasing financializations, like institutions want BTC exposure, and they use the same playbook they use for all their assets. So they create these derivatives and rehypothecation and ETFs. Meanwhile, more and more investors are lazy about their custody. They just let the institutions hold it. And then you start to get like more of these structured products. And what they do is they lock up BTC while offering synthetic exposure to others. And another part of this, I think, is that basically the incentive of the traditional financial system is to create these derivatives, because that's how they make money. So the end result is that you just have more Bitcoin IOUs circulating than actual Bitcoin that's available for settlement. So how this could work, how this guy, sorry, his handle again was Darkside 2030. How he envisions it playing out is you get a trigger. So liquidity events, like not even Bitcoin related, some bank failure around the world, some sovereign bond panic or something. And the response is that investors flee to Bitcoin, viewing it as the off-ramp from the fiat chaos. This leads to a stampede of self-custody. People take custody of their Bitcoin, removing it from exchanges and custodians. And then with less BTC available to borrow, as people take self-custody, the institutions can't hedge or settle their derivatives contracts. That causes the short squeeze. And it also leads to sort of a confidence crisis as people realize how fragile the system is, especially comparable to provable ownership on Bitcoin. And then you get this feedback loop, more panic, more people buy Bitcoin, more people take it into self-custody, less BTC for loans. The derivatives market sees up, more panic, and you get this reflexive loop that just sends Bitcoin into the stratosphere. That's the thesis as I understood it. Am I taking crazy pills here?
I see two. Oh, go ahead, Andre.
No, okay. So I think like I'm with you on the GME side of things, and how you wouldn't be able to crush a short squeeze on Bitcoin or really any crypto asset in the same way that you would be able to do it with like one of these stocks or any of these we call them traditional assets. So I'm with you there. I'm sort of with you on, okay, if there's a lot of IOUs going around and people can't
Sorry.
What does he think of the Bitcoin long, the big long?
He's
where they
he's a
can't
fan. Go on.
where they can't settle, so they have to basically purchase like spot or like find some other way to get the Bitcoin. I guess I'm struggling to see like a concrete example of how that plays out. So is it like, I don't know, JP Morgan is uh letting customers short Bitcoin, but they actually don't have any Bitcoin, and uh, then when the shorts go super hard underwater, JP Morgan actually has to go find Bitcoin because their clients need to be liquidated, and then they can't find it. So then it's like this reflexive thing. I guess that's like the step
Something like
that's
that.
missing for
Yeah,
me
it's something
right
like that.
now.
I think. Yeah, I think that's what is the prediction is something like that's going to happen.
I I have two issues with it. The first, the comparison to GME, I don't think is going to happen ever, uh, ever again. Really, institutions and institutional grade clients or whatever players were net short GME by a lot. Right, that's one of the reasons why they targeted GME. These short, like kind of these like vigilante short sellers were um, looking for stocks that the institutional grade people were way off balance, and that's why they chose GME. I don't see that happening to Bitcoin. I don't think that these institutions who are getting into this Bitcoin thing are going to. There's maybe 10, 20 years from now when they have more comfort with it, but it's such a high vol asset. It would be insane to me to think that they would be so they would have such poor risk management where they're really kind of getting net short. This they're gonna be it's gonna be like balanced on both sides, like you said, right? Like they might go long the asset and then short options or something like that, right? And just pick up the basis or something like that. So um, I don't see it getting way off whack like that for Bitcoin. And two, um, I wonder about this trigger event. How I mean, I think maybe eventually we can get there, but I don't see like in the recent 5 years, Bitcoin sells off on these events too. Now, granted, it comes back, but it doesn't it goes with risk assets thus far, right? So I
Well,
don't know.
on the net short side or the institutional short side, I'm wondering what I do see is like there's not going to be enough Bitcoin available for trading in order to satisfy like all potential
Yes,
short sellers or all potential like traders. So you basically have to be
buyers, just
trading
buyers.
derivatives. Yeah, right. So like
Yes,
you can't trade real Bitcoin in this situation just because there's not enough of it. And then that leads to these like weird entanglements where like, what am I actually trading? Does that guy actually have any Bitcoin? Is like, what's going on here? And you get like these weird obligations that obviously nobody knows what's actually happening because a bunch of this trading is going on in like the institutional TradFi layer, and then it blows up because it turns out, this is the equivalent of like an FTX type thing, but much deeper, where it's like, oh, there is no Bitcoin.
yeah. So unlike with GameStop, it doesn't require that the market be net short on the asset. It just requires according to this theory, it just requires that there be more paper Bitcoin than actual Bitcoin, and then a sudden
It would
demand in
Real Bitcoin.
people wanting real Bitcoin.
yeah, but I mean, it depends on how these derivatives are structured, right? Like if I think if it's structured in a way where you receive the actual asset, then what you're saying is true. But a lot of derivatives are just you get paid off, right? So it doesn't. They don't necessarily have to give you real Bitcoin at the end of it. They could just give you the money you've made. So I don't know how they're
But it could even
structuring
be
all
as
of
simple
these.
as loans too, right? Where if somebody is like, institution lends you, sorry, they would be lending out, yeah, like you're lending out your Bitcoin to somebody. They're doing whatever the hell you with it. And let's say they're an actual like reputable player. Maybe they sell it for, they're doing whatever with it, and now you want your Bitcoin back. They're obligated to go like buy it if they don't have it on them. And if that like becomes like a big enough thing, it's like, oh, either that institution goes bankrupt or the price of Bitcoin goes up like really, really high. And that goes back to how's the risk management, right? But if like I lend you my Bitcoin and you go like do something with it, and it's like I want my back, you're like, oh, I actually don't have it, and it's like, oh, in order to buy that amount of Bitcoin, the price is going to go up 10%, and then it just
Yeah,
like
and
keeps
and
cascading.
exactly. And unlike with every other financial asset in traditional finance, uh, you can't fake Bitcoin. Like if there's a rush of people trying to actually just take self custody of it, and that can happen very quickly. But with every other asset, like it can't. So like Bitcoin doesn't. It's kind of like a Trojan horse into the financial system that just like has the potential to cause chaos in the next like financial crisis, right? Just because of the way it's unprecedented how different it is. It doesn't like fit into the traditional system. The fact that you can withdraw it, take custody within minutes or hours.
I'm way out of my depth here. I'd have to do more research on the details because I think the details matter a lot here. And I mean, if these contracts, these derivative contracts, are like, I think it's called in kind, right? Then I think what you're saying is holds. But as far as I know, a lot of it's stuff like Robinhood, for example, they settle just in cash, right? You trade oil, you buy oil options. You're not getting delivery on oil, right? They just pay you money, and there is no. I don't think there is. I'm not sure if there is an option to even get the oil. Again, I'm out of my depth on this. So you could conceively
20 barrels of oil.
Well, I mean that happened. That happened right after COVID. Do you remember when oil went negative? Right, it was negative $30, and the reason is that a lot of these real contracts say you are legally obligated to receive the oil, and so options traders who were in their mom's basement were legally obligated to receive like 100 barrels of oil, and you can't do that, right? And so they had to pay people to take the oil, and then so it went negative, and that's why it went negative for those specific contracts, not for all of them. So anyway, yeah, I guess it's conceivable. I would personally bet that the institutions who are, at least the players who are in it now, I would assume that they've gamed this out, and they're aware of this. So I would give them credit for this kind of thing. But maybe they are really dumb.
Bullish note, maybe this is actually a very good case to never be net short Bitcoin. To never short Bitcoin, because this is exactly what could happen to you.
Yeah. All right. So
the funny thing is,
maybe,
let's say that this does happen. So it does trigger this like massive short squeeze. This would probably bankrupt or cause like systemic risk to traditional financial institutions.
Exactly. That's the point.
No, Graham. No, so let's go through the math. You can't just say that and you're like, oh, that's the point. What would happen then? What would happen next when systemically important institutions fail? I don't know if that necessarily would be good for the world.
The government.
Oh,
has to
I'm not
buy
saying
more
that.
The world that we
Bitcoin.
live in.
I'm not saying it that. Yeah,
Bailout.
definitely not.
Yay, my Bitcoin's worth $10 million. Oh, wait, they're eating people on the street. Shit. Oh, man,
Yeah,
what am I going to do?
that we don't want street eating people scenarios. But
No,
I
but
mean,
it's
at
a
a certain
government
point,
bailout.
yeah.
I think
Well,
that's what
look,
ends up happening.
at a certain point, doesn't there need to be like a new system? Like the fiat system, isn't it just like a giant Ponzi scheme? And eventually, like, aren't we at the late stages of the Roman Empire here, where we just need a complete reset? And yeah, maybe like whatever the new system is will be better.
Well, that's a whole other discussion. I would love to get into this with you. I mean, we could talk about it now, but I would say no, not necessarily. No, I think the fiat system has been, if you look at like GDP growth and lots of different indicators for output, economic strength, technological progress, it was supercharged by getting off of the gold standard, and there are a lot of really good reasons for that. And fiat, the fact that we have a fiat system, it can be attributed to much of this. Now, this is not to say that it's perfect or anything like that, but this notion that you see in crypto a lot, where for example, a Bitcoin based monetary system, just I think it's a massive mistake. And
Well, I don't think it necessarily has to be like Bitcoin is going to take over the fiat currencies. I just view it's like a bifurcation where like fiat is for settlement. Do not hold fiat, right? Like ever, right? Like for longer than you need to spend it. And I still think that that's like we're like a weird middle ground right now where I think basically everyone realizes this, right? Like that you should not be holding fiat, but institutions are still, they're still holding treasuries. They're still holding fiat as like long-term positions. Um, and I think like maybe that's like what collapses, where like everyone kind of sees the writing on the wall, where it's like in no way does it make sense to hold fiat if on a long-term horizon, and maybe something like this is like the final nail in the coffin for that system.
I don't know. Yeah, I mean, again, I would love. I can argue about this all day long, but having a currency that is pegged to a depreciating asset is poisoning your economy in your country for many reasons. For example, a deflationary cycle, and I saw some things on the recent on crypto Twitter where some people I follow have acknowledged that recently. For example, if money is the most valuable thing, i.e., all other assets are depreciating, history has shown that this causes truly terrible behavior amongst people. Why? Because they stop buying things, they stop doing things, they stop wanting to invest money, they stop wanting to grow their businesses, and they just want to hold their money. They want to hold their.
But it's literally happening.
Asset.
Yeah,
it's happening.
That may be the case. That may be the case.
Terrible. It's terrible, Andre. These Bitcoin treasury companies, right?
That doesn't necessarily have to be what happens next. I mean, you could end up with a situation where this like unsustainable debt bubble that's just been growing since the end of World War II, or even before then, leads to a situation where you need a reset. Like it's not politically expedient. It's not politically viable anymore for the rich to keep getting richer and the poor to keep getting poorer, and you will have a complete reset.
Do you think Bitcoin is going to do that? Like however, what is it, like the 20 holders who hold most of the Bitcoin in the world? Like that seems like you're just replacing the richer system with another.
I'm not saying that Bitcoin is the solution, but I'm saying it might be the trigger for the ultimate collapse. And it's the result could be likely to be very painful and dystopian.
Like super dystopian. That then like
so I'm not
Bitcoin
necessarily cheering for that.
It's gonna be the max.
I'm just
Bitcoin
like,
holders.
yeah.
By the way,
I mean,
all the Bitcoin holders would be
you,
instantly killed.
David?
It's a bunch of nerds. They're a bunch of
Yeah,
nerds.
exactly. By the way, I don't hold any Bitcoin. All right, just for posterity.
Exactly,
Right?
dude. Exactly.
But David, I mean, don't you agree that like this we're in an extreme debt bubble and something needs to change?
Yeah, I think
Like we're gonna hit a breaking point here.
I mean, yeah, but I I guess I don't see it necessarily as cataclysmic, and I think there are many ways to get out of this in a non Mad Max way.
Okay.
I think history has shown that there are definitely ways to do that. Right? There are obviously terrible ways to go through it, right? Like it often causes wars and stuff like that, but it doesn't necessarily mean that we're gonna implode our financial system, which we've been building on top of each other for like however many thousands of years of progress. I think it's like a weird crypto thing where, I mean, this is a meme where these crypto people say, "Oh, we've got this new awesome thing," and it is new and awesome, and they're like, "Oh, but we know how to do every financial thing better," and then 5 years later, they're like, "Oh, it's basically exactly the same structure
No,
as
but
before."
the thing is, like,
Right?
I don't
Slightly
necessarily
better.
believe in like that anything is going to be necessarily better, but I do see this trend is like now accelerating, right? And I don't see it necessarily like I think the negative things that you're talking about are happening, right? Like, what is a Bitcoin treasury company? It is something that is designed to not do anything, right? Like, but
Exactly, it's terrible.
this trend is now accelerating, and like even if you have a Bitcoin bubble pop, do those things go away? I don't know, right? And then I mean, this is the sailor meme. Now you have this like black hole of capital, continuing to
Speaking of which,
absorb more and more stuff.
Well,
And
so
what's the end of result of that?
exactly, it's for better or for worse. It seems that like this virus known as Bitcoin is eating the traditional financial system alive. Like the whole Bitcoin corporate treasury thing is a perfect example of that, where it's just finding ways to get access to capital and pile it into this asset that has a limited supply.
It's the GME short squeeze, but on a global level.
I think these treasury things are just highly speculative, and the ironic thing is because they're making such non-productive assets and incentivizing the exactly opposite wrong behavior you want from market participants. Wouldn't it be funny if that was the cause of a global financial meltdown? It's
Oh,
because you just
exactly. That's exactly what we're saying. It's
Yeah,
exactly
in a
what
negative
that's
way though,
exactly
as
the
in like
thesis.
Bitcoin was bad, not like
Yeah,
good.
absolutely, right? Absolutely. It's not necessarily Bitcoin is not necessarily going to come out of this being like everyone's going to be pissed off if this actually happens. Most of the world is going to be like anyone who holds Bitcoin is going to be perceived as the fat cat billionaires who like crush the system, right? Which is why I'm saying right now I don't have any Bitcoin.
So, but yeah, I mean, I again, I don't think it's going to be apocalyptic one way or the other. I really don't. I mean, I guess just like the mid curving milk toast thing. I think we'll get these like buzzwords we hear about now, like fiscal dominance and grow your way out of what's it called? Inflate your way out of debt, and Bitcoin will be benefit from that, right? And blah 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 blah. But I really don't think fiat's going to go away, and I don't think we need to go back to like an asset-backed currency.
okay.
But I
Well,
mean, maybe I'm wrong.
let's go to the as a proxy for this apocalyptic scenario. Do we envision MicroStrategy as ending in an equilibrium, or there's only two outcomes? Is it the to infinity outcome or to zero outcome? Or is there an actual equilibrium phase for for them to achieve. What do you guys think?
Yeah. I mean,
Graham, could you pull up that link while you're giving your answer about this? I put it in
you can go
the
first.
treasury.
Yeah, I've got it.
Yeah, what the hell is this?
Yeah.
Here's my answer, Andre. This is a post from Michael Saylor. He posted this.
STRF, STRK. So now we've got
Pentagram.
the pentagram. So sounds
Isn't it,
like
well,
we're
hold on. Isn't a pentagram an upside down?
Yeah,
It's supposed to be
no,
upside
but
down.
to me it seems eerily.
One
I don't know.
180 degrees away from the sign of the
Yeah.
devil here.
Yeah, it'd be like if you made a swastika, but you just like turned it around. You're like, what? It's just
Yeah.
Anyway.
I think I'm in the MicroStrategy to infinity. I'm talking myself into Graham's theory of the the big long. After this discussion, I'm in.
But don't you think that just going by past cycles, we always have like these main characters, to use the parlance of the cycle, these main characters that come and they start kind of sounding good, and then it just gets more and more elevated and crazier until you're like giving presentations that say 21, 21, 21, right? $21 million for Bitcoin, 21, whatever, all this. I just feel like just history would show that these central characters become maniacal, and it eventually
Yeah.
eats them.
And also if shit really hit the fan and like the US dollar started like seriously inflating and the price of Bitcoin started seriously pumping, you could see a scenario where like the guns just move like they find Sailor and they're just like, give us the keys to your stash, that's ours now.
Yeah.
So probably self custody. If you were to hold Bitcoin, which I don't, you should self custody it. And don't let anyone know about it. Yeah. So
Don't go on a podcast and shield Bitcoin for a year.
Yeah. So
But look, I just want to, for anyone watching, and I am a wet blanket, but I do like Bitcoin, obviously, and I support it. I don't have any too. I should buy some someday I will, but I am a supporter of it, and I think it's a great thing. I just don't think it's like Jesus come again, and I don't think it's the devil.
Okay, yeah. Yeah. No.
Digital gold. There we go.
Yeah, digital gold, but dangerous perhaps to the financial system, right?
Virus.
Right? A virus. Like unlike real gold, which like slows things down to the point where it doesn't really work in this situation. You can't just like instantly withdraw, sell your fiat, but get the digital gold and then like take custody of it. It takes like months, years, like at a global scale. If it just couldn't happen because the gold's in a few vaults around the world. But with Bitcoin, the financial system has never seen anything like this, so it's dangerous.
Well, this is what Christopher in the chat says. This is what the Second Amendment is for. So, so whatever the scenario comes, this is what the Second Amendment is for, David.
Well, unfortunately for me, I am a proud American, but I don't live in America right now. So
that's the right to bear arms, is it? The second one?
Yeah.
Sorry, I'm not caught up on my amendments.
Exactly. Yeah. I hope Bitcoin is more like digital gold and less like, what did you call it? Gold virus thing?
Digital gold virus.
Yeah.
Yeah, let's leave off the virus, and I hope
it's Y2K.
Boring old digital gold.
Yeah. Well, yeah, let's hope it doesn't crash the entire financial system and lead to Mad Max scenario. So I think that's probably a good way to.
Though?
Yeah.
wouldn't it be crazy though? Like for if the outcome of this was that everybody in the world hated Bitcoin and Bitcoiners because they find it responsible for destroying it. That would be some irony, man.
Yeah, I don't think that's an impossible outcome here. I think I don't think we're gonna top this discussion today, guys. I think that was a nice one. So
that was awesome.
Let's wrap it up there for today. Thank you, David and Andre.
Oh wait, hold on.
Oh yeah. All right.
Sorry. Dude, I apologize, but I've been negative on Bitcoin treasuries for so long, for months and months and months, and finally this week I had two examples of positives. I wanted to put this out there because you want to show two sides of it, right? So, one real positive of treasury companies might be the fact that I saw a tweet this week that it might be the case. This is from Ryan Watkins. That some I don't think this is for Bitcoin, but some of these treasury companies might be buying locked tokens from funds who got allocations for locked tokens, and this would be an actual real positive thing because the treasury companies would be way less likely to indiscriminately sell like these funds do, who are kind of incentivized to sell the second the tokens become unlocked because they already got such a high multiple on whatever reduced price they have. So this could be a truly positive thing for some of these treasury companies. Like I think you mentioned Enna, Andre. So that's a good thing. And then the second one, just real quickly, is the fact that hating on treasury companies is consensus now. It's kind of what you see all over the timeline. Does that make it less likely that it's a bad thing because it's so consensus that this is a terrible, terrible thing?
Yeah, that's a good point. And actually, this was brought to my attention by Mark Arjun of Blockworks Research. So shout out to him. And he noted that with Strategy, they actually have a debt to enterprise ratio of only about 10%. Meaning, so the market cap of Strategy is like 120 billion. They actually only have around $11 billion of debt, including all their preferred stocks. So what he noted is that it's actually that debt to enterprise ratio. It's kind of like being in year 27 of a 30-year mortgage. So you've only got like a couple years left and you've paid it off. So the point being that Strategy is actually in a good position to remortgage, right? To take on a lot more debt and buy more Bitcoin.
Up your leverage ratios while it keeps going to the moon. Keep upping the leverage.
Exactly.
Oh man. Really good.
All right.
Yeah.
All right, let's wrap it up. Thank you, Andre and David. Really enjoyed this one. Have a great week, everyone. Catch you next week on Token Narratives.